Welcome to another quick hit review video. It is Sunday. The market will be opening in a few hours, and I have three currency pairs that I'm looking at. The first one is the euro yen. So on the euro yen here on the dailies, what I'm going to do is put a structure level in at this major level here. It's major because we saw a major reaction from it, and if we look here, we do have a confirmed break below, close below, but then what we've been doing is we had this nice rally and we've just been moving sideways. So I am expecting a breakout here, and I will run through the reason why. The reason is because we have just violated structure and there is room to come down to this level just here. Also, look at this candle just here. We have around a 75% wick and a very small amount of body, and the rest of wick to the downside. So a bigger wick to the upside than to the downside, and you can see that we're closing lower and lower. So I'm expecting a breakout here, and I would treat this as a low and tight flag and play for that 127 fib. And as usual, though, we're looking for 4 touches, 1, 2, 3, 4 minimum. Now, we're not going to have a great reward to risk if we were to get involved right now, because this would be your stop right up here and this would be your reward. However, just because we've missed our optimum entry does not mean we have missed the trade. This trade is so big that there is around 120 pips to go until targets are hit. So what I can do is on breakout patterns, they're called breakout patterns because we typically break out with force. I can then drop down to the lower time frame. I can drop as low as the 5 minute, and as we get the confirmed breakout, look at being aggressive with the entry and rally, holding this thing down until we hit targets. At the moment, there's nothing on the other time frames, I'm afraid, to indicate that that's what we're going to do. But a breach of this level here, maybe then a pull, oops, let me do that again, maybe then a pullback and a chance to get short. So plenty of opportunity on the euro yen going into next week, depending if we get the breakout or not. Euro Aussie is a head and shoulders, which still looking at getting involved with. I'll put a structure level on just here at the close of the candles, and if you look left, well, we actually held this level and we're up at something like as a minimum 6-year highs. And if you look at the great big wick we've got here and the lower close, you can see that we have been working our way lower. Now, on the 240 though, what we had with this head and shoulders is there's the left shoulder, there's the head. Down here we have an initial structure low. That means we have a potential rotation in trends. So this level violated this level. We saw a pullback. Where did we see that pullback to? The wicks of the left shoulder, which just so happened to produce a double top, a break below, close below, a pullback for a 2618, and then another break below, close below. So depending where your targets are on this, as a minimum, for me, there is room for this to still come lower in terms of an AB equals CD pattern down to this level just here, which just so happens to be this level of structure. So let's drop down the time frames, and on the 60 we actually have able to see the trend a little better. New low, pullback, new low, pullback. So this is the outside return, so I'm going to be looking for a lower low, lower close anywhere within this zone, and I will be holding it for targets down at this AB equals CD patterns for first targets anyway. Secondary targets, I may just let them roll because, as I say, we are up at a minimum of something like 6-year highs, and we could see a very big retracement here on the euro Aussie. The last one I want to take a look at is the euro dollar, is it? Let's go and take a look at the euro dollar. This is actually a trade I'm in. I'll delete the information off I got in this trade on Friday. So reading the trend on the dailies, new low, and then we had a low and tight flag which broke out and gave us a new low just here. We actually violated all this level of structure, and if we just highlight the wicks here, we came up to this level, wicks, 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 lots of wicks to the upside, indication that that structure level was being held, and then we've had multiple lower low, lower closes. Now, here's the thing, on the daily we have come down to retest the closes of the candles. However, my overall bias here is that we are going to be coming lower. So I can actually move this down to this level and say that I think we're going to come down to test the closes of the candles. And as we drop down to the 60, we'll be able to see a very nice trend. So new low, pullback, new low, pullback, new low. What I'm going to do just here, there was a breakout pattern. And the middle of these breakout patterns act as brilliant areas to get involved with short opportunities. And that's exactly what I did. I got involved on the 15 based on, I think, can't quite remember, but it may have been this 3-bar reversal just here. Let me just bring back on the orders. So I actually have my stop and ATR above the outside return, playing for a retest of that lower 240 level. In actual fact, you could, if you wanted to, hold for secondary targets as well and look at playing this thing well. Where could it go? We've seen a large amount of consolidation. We could see the breakout here to this potential level down to here. So that's all I have on the radar for the time being. Stay tuned for more quick hit videos throughout the week.